Hey guys, this is Rudy for Investor Investor. I am in Florida. I have been so busy. I haven't had time to make a video, so sort of better check in, spend a few minutes with you guys because there's so much going on in the marketplace. Um, Good news, bad news, all kinds of stuff going on. But why don't we take a few minutes and just sort of see sort of what is happening in the marketplace right now as we speak. Just a couple of news headlines. So this is Yahoo Finance today. Today is August the 30th. It's Monday. The indices are a little bit green. NASDAQ doing quite nicely. It's up almost 1%, and we see crude edging back up to about $70 a barrel. What on earth is happening in the marketplace? Let's take a quick look. Michael Burry. So he's the super smart guy who was the big short in 2008, 2009 with the financial crisis, bet against it, made a couple of $1 billion. So he's obviously a much smarter guy than what I am. Betting against Kathy Wood's fund, Tesla, and selling these other 7 stocks. So let's take a quick look here at what Michael Burry is doing. His company, of course, is called Scion Asset Management. So Burry, who manages Scion Asset Management, oversees more than $2 billion in assets. And of course, most of you will know who Kathy Wood is. And I know some people like her and some people don't. It doesn't really matter. I just want to see sort of what's going on here. Burry took aim at soaring valuations in his prediction, and he has historically not been an admirer of investing in technology companies. So let's see what's going on here. It remains to be seen whether the bet that Burry has made against ARK Innovation ETF pays off in the long run. His hedge fund is not afraid of taking tech-related risks, as some critics point out. Some of his top holdings in the portfolio of Scion Asset Management at the end of the second quarter of 2021 included Facebook, Walmart, Alphabet, Kraft Heinz, CVS. Not a very high-risk portfolio there. In fact, quite steady Eddie, if you ask me, in terms of that little basket of diversified funds he's holding there. Not too bad. So there he is, the smart, super attractive guy himself. I'm not sure who the artist is, but that's kind of what he looks like, Michael Burry of Scion Asset Management. So let's see what is going on with his portfolio right now. Michael Burry is betting against selling and selling some of these stocks. These were ranked according to the investment portfolio of Scion Asset Management at the end of the second quarter of 2021. The first top 3 stocks in the list are the ones that the fund has put options against. The others are the stocks in which the hedge fund has sold off its entire stake. So the first 3 he has put options against. That includes number 10, which is Occidental Petroleum. So he's got some put options against Occidental. Oxy is placed on 10th on our list of stocks that Michael Burry is betting against and selling. It operates as an energy firm. Burry has sold off its entire stake in Occidental Petroleum, according to the latest data. On July the 23rd, investment advisor Piper Sandler maintained a neutral rating on Occidental Petroleum and raised the price target from $38 to $38 from $30, noting that the second quarter earnings were positive for the petroleum sector as a whole. At the end of the second quarter of 2021, 57 hedge funds in the database of Insider Monkey held stakes worth $3.6 billion in Occidental Petroleum, compared with 52, so 57 compared with 52 the preceding quarter of $3.4 billion. So up just a little smidge there in terms of hedge funds and the actual value in terms of dollar value. And then number 9, Now Inc. Number 10, NetApp, Meredith Corporation. So I'm not going to dwell on this too much. It's just interesting to see sort of what Michael Burry is doing as it relates to Occidental Petroleum. Let's take a look at crude just for a second here. This is sort of over the past few months. We can see this light blue line here, the trajectory of crude. And then we see the most recent little dip when WTI went down to about $42, $62 a barrel. And of course, at that moment in time, everyone thinks the sky is falling. So where is it going to go and what's it going to do? There are so many opposing forces in this little mix that it's a tough call, man. It is really, really tough. I chat with some people sometimes on my Twitter account, and here's this guy, Jeff Camo. We talked a little bit about uranium stocks and sort of alternative fuels. And he says he has these top 10. I hold a few of positions in some of these top 10. And I asked him, Jeff, what about Cameco? And he said, it's too safe for me. This is money I can afford to lose. And my goal is life-changing gains, retirement. So it's not sort of where I am right now in terms of what I'm doing. But it's always interesting to chat with some people and see what they say. So I just showed you sort of a little bit of a crude graph, and at the same time showed you Michael Burry and his trades on Occidental. What about oil in general, right? So oil could be primed for a 50% rally. The strategist said. Charles Kennedy, August 27th, today is August the 30th, so it's just 3 days ago, Friday. The price of WTI crude could be headed for a jump between 20 and 50%, judging from a bullish breakout pattern that suggests a major rally could be coming for the asset that has occurred just 3 times for crude in the past century. Crude oil has seen what is called a golden cross on its weekly chart. Now, for those of you who've been following my channel, you will know that I'm not really a chartist. I prefer to look ahead rather than looking back, and charts by definition is looking back. But when they say they saw a golden cross on its weekly chart, it's automatically interesting. Matt Manley, equity strategist at Miller Tabak, told CNBC's Trading Nation program, the so-called golden cross appears on a chart when the short-term moving average of an asset crosses above its long-term moving average. The gold cross chart pattern points to a potential for a major rally. This has only happened 3 times since the beginning of the century, and each of those 3 times it has been followed by a very strong rally in crude oil, anywhere from 20 to 50%. And that is quite a jump. According to the strategist, the energy sector looks good if the market holds up and continues to rally. The energy sector has outperformed the overall market by a large margin since last October, even with the pullback since July. If the market holds, energy stocks could do really well in the 4th quarter. Despite lingering concerns about the Delta variant, major investment banks continue to be bullish on oil, although not all are as bullish as Goldman Sachs. For example, Goldman's analysts kept their forecast for Brent at $80 a barrel at the end of this year, even though they expect the Delta variant surge to have a transitory drag on oil demand over the next 2 months. Looking beyond Delta, we expect the demand recovery to continue alongside rising vaccination rates, Goldman Sachs said in a note in the middle of August, which is just a few days ago. But here's another article, this one from oilprice.com. Says oil could rise further as OPEC suggests keeping output cuts in place. This is from today, which is August the 30th. Now, very recently, of course, we had the U.S. administration saying to OPEC they need to help with the energy price and produce a bit more oil, which was like ludicrous. But anyway, here's sort of feedback related to that. Crude oil prices could rise further if OPEC Plus stops adding barrels to global supply, which is a possibility after the cartel's next meeting, according to the Kuwaiti oil minister. The markets are slowing. Since COVID-19 has begun its 4th wave in some areas, we must be careful and reconsider the increase. There may be a halt to the 400,000 barrel per day increase, said Mohammed Abdul Latif Al Farez, as was quoted by Reuters. OPEC had agreed to boost production by 400,000 barrels per day every month beginning August until the group's combined output reached pre-agreement levels towards the end of next year. But now the demand concerns are coming back again. OPEC is signaling that it is ready to change tack. It's worth noting that the Kuwaiti minister's comments came soon after President Joe Biden called on OPEC to boost production by more than 400,000 barrels per day to offset strongly rising fuel demand in the world's top consumer that led to a sharp rise of prices at the pump. There are meetings with OPEC countries, especially Gulf Cooperation Council countries, that are so far that are different views, and so far there are different views on how to handle this issue. Competitive energy markets will ensure reliable and stable energy supplies, and OPEC must do more to support the recovery. White House National Security Advisor Jake Sullivan said in a statement earlier this month, in what was one of the first direct calls from the Biden administration on the OPEC alliance. Higher gasoline costs, if left unchecked, risk harming the global ongoing recovery. Different opinions about how to respond to this call, however, were understandable. President Biden has prioritized emissions cutting and a switch from gasoline-powered to electric cars that would diminish the demand for oil. In the context of his administration's quest against the fossil fuel industry, a call for more oil sounds not a little confusing. Yet if OPEC does indeed reconsider cuts at its meeting on Wednesday, there will likely be more calls. So interesting stuff going on. You know, it's like I don't recall ever seeing or hearing the US administration effectively asking OPEC to boost production in order for Americans to have a better price at the pump for gasoline. Well, you know, it's interesting times. There's a huge dichotomy of opinion and sort of almost a binary type of mindset here in terms of where oil is going. Like, you know, is it going to explode and go up 20, 30, 40, 50% from where it is now? Or otherwise are macro events like the Delta variant and political interference going to impact it negatively and prevent us from enjoying a big bull run on oil? Let me know what you guys think. Most of you by now know what I think. This is Rudy for Best Your Investor signing off, saying thanks for watching. Take care. Bye-bye.